So here we are, another weekend, Saturday, 24th of Jan 2026. Lots on the downside happened this week. So lots to discuss. I have a three time frame on my layout, which is on the left. I have the weekly, the daily in the center one, and the 75-minute on the right hand side. But for the sake of understanding and analyzing the sectors, end of the week point of view, I do not think 75-minute is needed. It's more from an executional point of view. It's more from an timing your trade, your short-term trade point of view. So for this particular discussion, I'm going to restrict myself to the two time frames, which will be weekly and daily. In fact, next week when we discuss, I'll bring in the monthly also, as the month is about to come to a close. Let's start off with Nifty. As we will progress, we will take a look at the sectors. We will use the concept of relative strength with RRG. So Nifty weekly first. On my left hand side, our state of flow was negative last week, and for 2 weeks we have a negative state of flow, which means that on the weekly charts, prices are heading down. No doubts, for last 2 weeks we can see negative bearish Heiken with no upper shadow. I use Heiken-Ashi, of course, but if I change this to a candlestick or a bar chart, you will be able to see and understand the extent of sell-off we experienced last week. It was like an opening high last week. So the moment it opened on Monday, throughout the week's trade, the index didn't even attempt to go above that high, to go above that open of the week. So it was clearly a weak market. No second thoughts about it. You will be interested to see that a negative decoy had taken a shape, which had opened up on the downside. These are very strong decoys. Nevertheless, weekly charts, negative. Trend-wise, momentum-wise, and yes, of course, it will go deep now. If you take a look at short-term RSIs or any oscillator, they will go deep oversold. That's the characteristics of bear market. From the weekly, it's clearly negative. No second thoughts. Come to the daily. The daily has gone through a series, in fact, 2 legs. I have been talking about this earlier, that wait for the pullback and bounce back. And if it opens on the downside, it will be sharp and severe. Yes, it was sharp. It was severe. State of flow, negative. Heikens, clearly not that great. No divergences whatsoever on my short-term RSI. Are there any signs of past supports at these kind of levels where the market is trading? I don't sense, so I don't see that. In fact, if you add on the way the market closed yesterday, 241 points, we did clearly see, and I will change my Heiken-Ashi to bar chart again and change just for the sake of understanding 75-minute chart. And you see throughout the day, in 75-minute time frame, you get 5 candles. The first 4 candles were all completely weak. It's just kind of consolidated towards the end. Not a good close. So daily chart, not in a good phase. Daily charts close also not that great. This is our daily chart. Any sign of selling slowdown? Any sign of divergence? No. The only thing that we can see are the last 2 Heiken-Ashis have upper shadows, which is okay. But then look at the close. The close was almost at the lowest point of Friday's low. So if we add up weekly and daily together, it's not a good market. What we are trying to do is essentially read what's happening. We're not trying to predict. Okay, we are not trying to predict that this market will fall more or this market will bounce back. That is not our approach. Our approach is what's happening. Try and read that. Understand what price is trying to tell us. So what's the answer? It's a weak price behavior. If it's a weak price situation without any sign of selling slowdown, then this kind of a market there's a high probability that it will drift further down. Can they bounce back? Of course they can bounce back. But the probability of angling down further is high. So view is bearish. Strategy, no change in our strategy whatsoever. For almost more than 2 weeks, we've been very careful and very clear that if you are a short-term momentum long trader, stay away from this market. And if you had stayed away, it would have paid off. Any long attempt during this phase, mm, especially if you're trying to pick a contra trade, would have backfired very bad. So continue to do so. Long short traders, especially who trades the futures, would have definitely got short opportunities. They would have played out really well. You can continue to look out for such opportunities. So, in short, market is still in a very much bearish condition and situation. If you're a long momentum trader, stay away. Last, uh, if you are a long only investor also, which most of us are, then of course you can start looking at weekly, monthly charts, sectors and good quality stocks wherein you don't mind holding on to them for a long span of time. You will find them relatively cheaper. So this is not a bad time for some degree of accumulation. It is a bad time for short-term momentum trading. Can we go to the sectors? When we go to the sectors, we always take a look at relative strength. And for that, we use RRG. I'm using the Strike Analytics page here, and I'm going to bring our sectors to these NSE sectors, which I have a watch list of 16 sectors over here. Benchmark, I'm going to select Nifty 500. That's up here. Time frame, I'm going to change daily to weekly. And I'm going to increase the count. Can we take some reference from the chart? The reference from the chart can be, this was an all-time high close to 3 weeks back. We can take some reference from this point onwards, which is around 3, 3, 6, 7, 8, around 8 to 10 weeks. We can consider around 10 weeks. Let's see. From a 10-week point of view, that's when the market started to go range bound the whole of December, maybe the last week of November, December, and now we have 3 weeks of Jan. That's the period we're looking at. And in these 10 weeks, metal has become the biggest gainer. It's good to see we've got quite a few names in the leading quadrant. That's a good thing. So let's try and evaluate. Let's start with the Nifty metal, should we? Nifty metal, good looking RRG. I'll repeat again. Every Saturday when we discuss markets and sectors with RRG, I always repeat this thing. Any RRG chart angling left to right, down to up is a good RRG. So metal, relative strength wise, positive. And the next one is IT. Fantastic. It's been supportive to the market for quite some time. So Nifty metal and IT, they both have relative strength. They both have a decent degree of momentum of the relative strength, which means from a point of view of relative strength, we should look at metal and IT for long trades. If these sectors, if these stocks gives you some kind of a bounce back or a breakout. With that in mind, can we take a look at Nifty metal first? The biggest price gainer over the last 10 weeks. We already had a green flag for past few weeks now, so no surprise there. Weekly chart is still in a state of flow positive. See, we do this analysis from an end of the week point of view. Two main criteria is how is your weekly chart price wise and what is the relative strength RRG wise. These are the two main factors. Daily chart plays a role only when we have conflict between the weekly price and the weekly RRG. In this case, the weekly RRG and the weekly price is unanimously positive, so no second thought. It's a positive chart. Now we come to the daily and we see that there is a bit of a choppiness. It's creating some kind of a rising wedge. It can give us a reversal. It can continue to pick up. So we don't have to do any kind of prediction which way it will go. Relative strength is good. Weekly chart is good. We maintain a bullish bias. And whenever the chart is stretched, it's always good to look for short-term corrections. You can trade breakouts, but I personally prefer to wait for short-term correction. It creates headroom. So metal, green flag continues. What about IT? ITV did not flag last week. We kept it neutral because our state of flow was not there, and it's still not there. You can clearly see the shadows on the weekly charts for the last, particularly for the last 2 weeks. You can see there's barely any hike in body, and it has a decent amount of shadows on both the sides, which is reflective of this oscillation, choppiness, volatility. So it does not have the clarity. RRG is telling us it has the strength. Price is telling us, yes, it did go up, but now of late, it's not doing anything. Now of late, it's going both the ways. And so we will maintain a neutral bias on the IT. What does a neutral bias mean? That we are neither heavily bullish nor bearish. We will look to, we'll look into it and we'll wait for some clarity. When a sector is neutral, it can go either way, which means that within the sector, if you trade stocks, and when you take a look at the top 5 or 10 stocks, you may get stock charts which looks very clean, very well poised on the weekly, daily is coming off and can reverse. So one can take such trades, especially if the sector is neutral, because from neutral, it can give us a positive breakout, especially if it has relative strength. So keep in mind that IT can pick up further momentum provided it gives us a proper breakout and it needs to sustain. Right? So IT neutral, looking out for some positivity. Now who's next? Bank Nifty, of course, private bank and financial services. All of them, they have entered the leading quadrant few weeks back. In fact, quite some time back, but they have not picked up. You see that after they entered the leading quadrant, a Bank Nifty financials, they have kind of lost the momentum and slowly they are gaining some relative strength. This kind of a RRG reading is okay, positively okay. Not like really, really good like this, but manageable. We have to look out for opportunities. It's not going to come easily served on a plate. Bank Nifty, we had not given a flag. We stayed neutral. Why? Because our Heiken was not that supportive. And we also had a negative divergence to deal with. For the last 2 weeks, we do not have a state of flow. This week, we have a red body on the Heiken. We have a pretty long shadow on the lower side. The close you can see is at the lowest point of the week's range, almost at the lowest. It's not a good close. It has started to angle down. State of flow is still neutral. Divergence is there. Relative strength is still okay. But of all these things, it has given us a breakdown. We had marked this, which was supports for quite some time. It has clearly given us a breakdown. Daily state of flow and everything is negative. So can we go negative? No. Why? Because my RRG is still fine. My weekly chart is neutral. So any short trade, or if banks or Bank Nifty, private banks, etc., if they all continue to fall the way they have fallen last week, it will be slightly a preemptive trade, preemptive move. Only for someone who can preempt it. I would always suggest stick to the rules and wait for some clarity from the weekly and then take trades from the daily. So I will maintain a neutral bias, Bank Nifty, which means that I should quickly take a look at private bank. We had maintained a neutral bias on private bank last week. State of flow on the weekly has turned negative because of the size of the body. Can you see the close? Private banks not looking that great. They are the ones which are dragging the Bank Nifty. However, private banks' relative strength is still okay. So we give weightage to relative strength and price. Price is clearly negative, to be honest. Relative strength, let's take a look at the angle of the relative strength of Nifty Private Bank. It's actually good. It's actually pretty good. It's not bad. It has relative strength. So for a trader who has decided that I will short weakness, he or she should stay away from shorting private banks. Can this bounce back? Anything can happen, but we will maintain a neutral bias. It's only because of relative strength we are not giving a red flag. Finance, we maintained a green flag. Finance, we maintained a green flag because of this probability of this breakout on the upside, it was range bound. But then this week, pretty bad. You can see the week's Heiken state of flow has turned negative. Close is at the lowest point of the week. Daily is negative. RRG is still holding. So this goes neutral. Because of RRG, because there is relative strength, financial services, because of this angle, not necessarily leading quadrant. If I had seen that it's giving a move like this, I would have marked it red. But because of the angle and the positioning of RRG, finance for us is neutral. The another sector which is there in the leading quadrant is Midcap 100. And you can see Midcap 100 is turning down. It's going back. It's given a U-turn. So Midcap and small cap we will discuss at a time. Small cap is in the lagging quadrant. Clearly, it has been weak and it's now picking up a bit of momentum. This is interesting. So let's take a look at Midcap and small cap. Midcap positioning was relatively much better of late during this period when the small cap was coming down, but now it's broken. Price wise, it's gone, and RRG is also turning around. So mid cap, I will continue to from neutral, I'm gonna go red. Small cap, anyways, was red for quite some time, but recently gave a pretty sharp bounce back, which again has opened up very clearly on the downside. This was a sharpish bounce back. This area. Now for the last 2 weeks, clearly down. Relative strength definitely not there. So both goes red. I don't think there's much problem with small and mid caps. Let's go back to RRG. And now let's take a look at weakening. Weakening, we have PSU Bank and Auto. If you remember, Auto and Metal had entered the weakening. Metal has turned around, Auto has not. On the other hand, Auto is going right to left, up to down, which is not a very good relative RRG as of now. PSU Bank, exceptional relative strength, had cooled off the momentum and now it's picking up again. PSU Bank, I think we maintained a green flag for a very, very long time and it was still green till last week. This week, state of flow is still positive. Looks fine. Every time it consolidates or corrects, it opens up opportunities on the upside. We have a divergence to deal with, but still keep a cautiously bullish bias. This has to stay green. Auto, we kept a neutral bias because of the state of flow, because of the shape of the Heiken, because of the way the Heiken closed. This week, it has extended on the downside. State of flow has turned down. Clear cut, sharp correction. I think of all the strong sectors, metal, auto, in fact, banks were holding also, which have come down. I think auto has come off most sharp, the way they have come off. So weekly price, state of flow negative, RRG not so good, daily chart bad, of course, any kind of bounce back, overbought. Conditions can be used as opportunities on the downside. So auto, I'm going red. Okay. Small and mid cap was there. Auto was there. And now we come to auto and PSU Bank was there. PSU Bank, auto we have covered. Now we come to lagging quadrant. Lagging, we'll quickly take a look at FMCG and consumer durables together. FMCG, nothing great. Still very much weak. Consumer durables was picking up a bit of momentum, now again losing relative strength. So again going right to left. Not good, both of them. FMCG, we've been red flagged it for a long time. Does not need much time to figure it out. Red flag has to stay. State of flow goes negative. Daily chart, I don't see any divergence. So there is a bit of a slowdown on selling, but no signs of divergences. So stay away. Consumer durables was neutral. We went neutral because of this beautiful green Heiken, followed by some consolidation and this neutral state of flow. But last week was murderous. It's very, very strong sell-off. You can see the extent. Stay away. Not stay away. It has to go red. Red does not necessarily mean that we are trying to say it will fall. Red means our view. We are bearish on consumer durables. If I'm a long trader, I will stay away. If I'm a long momentum trader, I will stay away. If I'm a long contrarian trader, then you will be looking out for, some kind of a W pattern and all those. For a momentum trader, these are the combination for a short, which means any kind of bounce back should be an opportunity. So FMCG consumer durables was not that difficult. Let's talk about energy. Not good. The RRG is clearly angling down. Let's take a look at the chart. We had marked it red flag last week. Sorry. We had marked it red flag because of the Heiken, particularly because of the Heiken. And this week it falls further more. State of flow negative, RRG negative. We have a hidden divergence on the daily. So clean, energy negative. Small cap we have discussed. Realty is the other one in the lagging. That gave a breakdown, big time breakdown. And the RRG is weak. Realty, we had marked it red. No problem there. State of flow goes negative. Clean sell-off. What can you expect? Until and unless we see any sign of selling slowdown, stay away from these kind of charts. This is a mega breakdown that Realty had given because it was a pretty well-established support. Remember, Bank Nifty has also given a breakdown from a well-established support that can be crucial for the market. So this wasn't that difficult when it came to the lagging sectors. Now the last one are the improving, where we have public sector enterprise giving a turnaround. Pharma, it's got nothing. It does not have relative strength. It does not have the move behind it. And then media. Media, you know that it has been picking up momentum of the relative strength for quite some time. Maybe it's trying to give us move. Not the best of sectors that I prefer, but maybe one or two stocks which might be helping this kind of a move. So we'll take a look at PAC and pharma. PAC, we had marked a green flag because of the fact that it had picked up state of flow and it just consolidated for a week. That was last week. But this week, it has opened up on the downside and clearly it has gone negative. So, relative strength, not good. State of flow goes red. I don't have much to think about. This has to go red. What about pharma? Pharma, we kept a neutral bias, but this week it has clearly opened on the downside. Clearly, any kind of bounce back should be an opportunity. Remember, polarity can kick in. These kind of range, when they break down, in the future, they become resistances. So pharma goes negative. So quite a bit of sectors are turning to a red flag, which is obvious because of this sell-off. Apart from that, we take a look at 5 more sectors which are not there in RRG. Let's take a look at capital market. Neutral on the weekly. No state of flow. Very, very choppy it was. You can see the choppiness. Let's stay neutral. Chemical, less data, but state of flow has gone red. We will start to now add some views to it. Red goes chemicals. Defense was positive because of the state of flow. Now, sadly, the state of flow has gone. It has gone neutral. It could not pick up from last to last weeks. The overall market overweight this fall and this has to go neutral. Digital, it has some IT exposure, but state of flow was negative for the last 3 weeks. No second thoughts here. It stays negative. And finally, tourism, negative. So this is the situation where we stand right now. You can see that barely 2 of the sectors we have marked a green flag, few of them neutral, and many of them red. This is very obvious because what we do is we take a look at price, we figure out what's happening to price, and then we decide on what's our view. So, of course, in a falling market like this, most of the flags will be red. Most of the flags red does not necessarily mean that it will fall. Most of the flags, because you see, the fall comes when everything is at its best, right? The fall generally comes at the top. At the top, most of the readings will be positive. At the bottom, most of the readings will be negative. But we are not into the prediction game. I'll just reiterate. This is our view. Based on that, a trader should wait. From a investor point of view, of course, a falling market is opening up an opportunity. Of course, that's not our mindset. That's not what we are discussing in this video, in this end of the week market analysis. Quick look at the commodities. But before that, 91.63 rupee is at its all-time low. It's not looking good. This will have pressure on the Nifty. Talking about silver, it's on a high and let it continue. There's very little that you can do with these charts. apart from the fact this continue. But you can do something with the other material, the other commodities, I'm sorry, something like a copper, which is consolidating. State of flow on the weekly is still holding well. So that probably can pick up. Aluminium. Take a look at zinc also, which is consolidating. Not like silver or gold, which is not even consolidated at all. These guys have consolidated. And then crude, which is breaking out. And then natural gas, which was a complete turnaround. The most strongest move on the upside last week, 2 weeks, I think, will be natural gas. So commodities continue to dominate in terms of relative strength asset-wise, not sector-wise. And that continues to stay. Overall, the market conditions, the market sentiment is not that great. It is clearly getting reflected on our charts. Until and unless we get any signs of selling slowdown, I would strongly suggest, if you're a momentum trader, long only, stay away. If you're into short trades, of course, you will get opportunities. Right? Okay, that's our end of the week market analysis. Now let's focus on clearing out your conceptual doubts.